Tesla stock has been absolutely on fire lately, and one of their more well-known investors who is very bullish on the stock is ARK Invest, who still has a price target of up to $6,000 a share within the next 5 years, and that is especially due to automation. But even in their bear thesis, where Tesla would just be strictly an electric vehicle play, they still think that the stock could nearly double to around $600 per share. Needless to say, this is one of the biggest Tesla bulls out there, and in today's video I want to talk to you guys about why they are so optimistic on Tesla stock. Should be a fun video. I hope you guys enjoy this. Let's go ahead and get started. What's up everyone, my name is Ale. Welcome back to my world of stocks. Alright, let's go ahead and start by taking a look at who ARK Invest is, how much Tesla stock they own, and what their overall bull thesis is on Tesla. Okay, so taking a look at the stock, we can see that it's been very volatile over the last 5 years, but if we zoom in a little, we can see that just in the past year alone, the stock went from close to $400 a share all the way down to less than $200 and then bounced back up to over $300, which is where they currently stand today. In terms of my position, I bought Tesla stock for the first time this year as it was dropping heavily all the way down to around $170 a share, which at one point gave me an average cost of only around $190, but because I added more to my position over time, my average is now a little bit above $200, but I'm still up around 50% on my position, so I'm pretty happy with where I'm at the moment, and I'm not really looking to add any more at these levels, even though I do still really believe in Tesla's long-term future, but I'm just hardwired to buy stocks when they're actually going down rather than when they're soaring up, which is what we've been seeing over the past few months, and especially after their most recent earnings, which I'll comment on a little more in just a second when we dive deeper into the bull thesis from ARK Invest. But who is ARK Invest anyway? Well, they're an investment firm that also offers advisory services, and they're primarily focused on disruptive innovation. So their typical stocks that they invest in are usually more on the growth side of things, hence why they're invested so heavily in a stock like Tesla, who has struggled to be profitable but usually sees very high revenue growth and has a lot of future potential in disrupting the traditional ICE vehicle market. And so because of this, ARK Invest offers innovation-focused ETFs like their ARK Innovation ETF, ticker symbol ARKK, that has performed very well over the past 5 years, climbing by over 121%. For context, I believe the S&P 500 has only climbed by around 50% over that same time period. So ARK has, for the most part, been beating the market by a wide margin. And of course, Tesla is the largest holding in the ETF at over 560,000 shares that are worth over $175 million. Morningstar lists them as owning even more shares than that at over 814,000 and ranks them as the 16th largest fund invested in Tesla, while also holding the second largest concentration of its portfolio at over 12%, meaning that over 12% of the ETF is actually invested in Tesla. And as you can see here, there are several other ARK funds or ETFs that have large concentrations in Tesla as well, although according to Business Insider, ARK is only the 21st largest shareholder of Tesla stock at a 0.65% stake in the company as of the end of the second quarter this year. Still a decent size though. In any case, the reason why ARK has invested so heavily in the company is because they're extremely bullish on the stock. In fact, ARK's founder, CEO, and CIO, Catherine Wood, made headlines earlier this year when she tweeted that the high end of their bull case would see Tesla stock trading for up to $6,000 a share. For context, even after using today's higher prices, that would be an increase of over 1,800%. And as Business Insider pointed out at the end of October, even ARK's bear case for only electric vehicles would still be close to double the current share price, set at around $600. Now, in that same report, they also noted that ARK Invest sold over $39 million of Tesla stock before their most recent earnings, which is actually something that a lot of you were asking me about in the comment section and in messages on Instagram. But if you read past the headlines, it turns out that ARK was buying a lot of the stock when it was super low at around $170 a share. But as a result of the recent recovery, their holding in Tesla was getting larger than the 10% limit that they self-impose on a few of their funds, so they had to trim their position a little as a result. It's kind of sucks though, because the stock obviously skyrocketed on their third quarter earnings, so they kind of missed out on some gains there. But in any case, Tesla posted their best trading day in 6 years, given the unexpected announcement of profitability that was built off of record deliveries, proving that not only does Tesla not have a demand problem, which is something that the bears kept insisting on, but that they can actually be profitable even with lower margin vehicles like the Model 3 leading the pack. Okay, so clearly ARK Invest is very bullish on Tesla, and this most recent quarter looked pretty strong for the company. So let's take a look at why ARK Invest is so bullish and what they had to say after this most recent earnings. Let's take a closer look at that right now. Okay, well, in my personal experience, the first time that I ever heard anything about ARK Invest was when they wrote an open letter to Elon Musk back in August of last year, at the time that Elon was thinking about taking the company private for reportedly $420 a share. Whether that was all a joke or just a way of burning the short sellers, it's not really relevant to me. Instead, what I found interesting was the reasons that ARK Invest listed for why the stock should be valued in the range of $700 to $4,000 over the next 5 years. And this was organized into 3 critical areas where Tesla stood far ahead of any competition by at least 3 years. Those being number 1, battery production and efficiency, number 2, autonomous hardware, and number 3, autonomous data. Well, let's tackle each of those one by one. Starting with number 1, at that time, ARK Invest noted that Tesla was on track to be the largest global producer of mobile batteries thanks to their Gigafactory 1. Well, fast forward to Tesla's Investor Autonomy Day in April, and we know that not only did it become the largest battery factory in the world, but it was also producing around half of all electric vehicle batteries in the world as well, while the technology only continued to get better as Tesla vehicles have also become the most energy efficient EVs by a pretty decent sized margin. Fast forward even more to today, and we know that Tesla has made numerous acquisitions this year to push their lead even further, like acquiring Maxwell Technologies at the start of the year that has amazing intellectual properties that have to do with increasing battery densities, range, life, and also improving costs. They also acquired High Bar Systems last month that specializes in battery manufacturing systems, specifically for electric vehicles. And as if all of that wasn't enough, they're even working on a new battery chemistry that produces batteries that can last 4,000 charge cycles and around 1 million miles of driving in its lifespan. By the way, that was revealed in the Journal of the Electrochemical Society just a couple months ago, and it just so happens that the group of researchers have an exclusive agreement with Tesla, who just so happened to file a patent a few days prior for the same technology. Okay, next up, we'll just lump in points number 2 and number 3 together as they're pretty related, but they basically say that Tesla will have an enormous advantage over the competition, given that they have a better performing chip, which they believe to be 3 years ahead of the competition at that time, and the fact that they've collected billions of miles of autonomous data thanks to all of the customer vehicles that they've already put out on the road that continue to add more and more data every day, while the next closest competitor only has tens of millions by comparison, and that competitor is, of course, Google's Waymo, in case you didn't know. Well, this is where they really start to see the most potential for the stock, given that they expect revenue for autonomous platform providers, specifically those involved in ride-hailing services, to exceed $2 trillion by 2030 with very high margins. We'll fast forward to that Autonomy Day again, and we know that Tesla was very clear about their ambitions to launch a robotaxi service as early as next year. In fact, they're aiming to release over 1 million Tesla cars by mid-2020 with full self-driving hardware. That's a big deal because those vehicles can essentially earn you money while you sleep, and therefore Elon Musk has stated several times that the price of fully autonomous Teslas will likely rise significantly in the future to reflect that added value, which would obviously lead to higher margins. On top of that, sales are expected to surge given the ride-hailing market in the United States alone is expected to be worth over $75 billion in just a few years. Not to mention that the autonomous semi will also be competing in a market that is expected to climb to over $160 billion by 2025. And by the way, none of this would even be feasible if Tesla wasn't making so much progress on their battery technologies, given that a robotaxi service and an autonomous semi-fleet would both need to drive an enormous amount of miles and go through an enormous amount of charge cycles in their lifespan, so the new million-mile batteries would be a huge benefit in these areas. Well, that mostly catches us up to present day, but I'll just finish up here by noting what ARK Invest also had to say after their most recent earnings that sent the stock soaring. And in an interview with CNBC, Catherine Wood noted that shorts are likely covering, causing a spike in the price, and that she expects them to continue covering over time as it's becoming much harder for bears to make a negative argument against Tesla, given that they're performing so well at a time when the auto industry is experiencing declines. The report from CNBC goes on to explain that the day after earnings, the stock climbed more than 17%, causing short sellers to lose $1.4 billion. But the huge run-up wasn't enough for Catherine Wood, who told CNBC that the surge was just the beginning in its eventual rise to $4,000 a share and beyond for the reasons that we mentioned earlier. Of course, that would mean that the market cap climbs to over $700 billion, which would mean it climbing from the $53 billion market cap at that time. Needless to say, ARK Invest is very extremely bullish on Tesla stock. And look, I don't really blame them. I think that they do a great job of explaining their reasoning and laying out all of their different points, and a lot of it makes a lot of sense. But before I'm willing to get that bullish on Tesla, I would like to see a few different things happen. Number one, I would like to see that robotaxi fleet actually launch and gain some traction, and for it to perform, pretty well and kind of starting off. And I would also like to see what regulations look like, because I think that's going to be a major hurdle, and at the very least I think it will kind of delay everything, and I think they're being a little optimistic about when they can actually fully launch that whole robotaxi fleet. Number two, I would obviously like to see them be more consistently sustainably profitable. That's obviously a big deal, but I think they will get there over time, and I think that the Chinese factory is going to be a major help in that as well, because it's drastically improving margins as they're able to build cars much cheaper out in China. And then on top of that, I would also like to see, and speaking of the Gigafactory, I think I would also like to see some progress made in building a Gigafactory out in Europe, because that would also help with margins out there, because then you don't have to kind of ship everything out there. It would help with logistics and all of those kind of costs as well. And then the last thing is, I would also like to see some actual competition come out into the market, because so far, let's be honest, we haven't really seen any real challenger come in and be a threat to Tesla. Every time that a company announces an electric vehicle, the Tesla bear community goes wild and they start screaming, oh, this is going to be a Tesla killer, oh, Tesla's doomed. And then the cars end up being like mediocre at best, and there's just really no challenge to Tesla. And I'm not saying that there's not going to be real threats in the future. I do think that competition is coming. I'm very curious to see, though, how Tesla's brand kind of holds up when some real competition starts to come in the market. My kind of opinion on that, or my thesis on that, is that Tesla's brand will still hold up very well. I wouldn't be invested in Tesla if I didn't really believe in the company and in the brand. And I think Tesla will remain the market leader for sure. I think that competition is actually going to be like healthy competition. I think it'll kind of encourage everyone to be improving and innovating, and Tesla has no lack of innovation themselves. So I just see Tesla just getting better and better, and I just think that they're so far ahead that even when the competition comes out, I think there's going to be plenty of room to have some smaller competitors, but I still think that Tesla is going to be like top dog in the market. That's just my opinion. I could be wrong, but that's how I feel. So I remain very bullish on Tesla's stock, but because my average cost on it is in the low $200 range, I don't really see the need to add to it at this time. Granted, the stock could absolutely keep climbing, but I'd only really be willing to add to my position at higher levels as the Tesla, the company, continues to get bigger and bigger, which I do think will happen. But I also think that so many people just hate Tesla as a company for some reason that I'll never understand myself, that I think we're always going to have some dips here and there, and I think there will always be some buying opportunities. So I really have never felt like a huge urge to buy into Tesla's stock. Never felt like a sense of urgency, because I think there will always be little dips and buying opportunities. But this last one that we had this year, that was a really great buying opportunity in my opinion. And I was able to take advantage of it, and I'm happy with my cost basis. And I'm just kind of holding my stock long term now. But if I do see some lower prices, yeah, I'll probably take advantage. Or if the company continues to perform better and better and I see more opportunity, then I will add to my position, even if I have to do so at higher levels. But for right now, there's just some things that I'd like to see, like I mentioned before: profitability, the robotaxi fleet, regulations, competition. There's just some, there's some things out there that I'd like to kind of see how Tesla deals with them before I'm really willing to turn it into a much bigger position. Anyway, I think that does it for today's video. I hope you guys enjoyed it. Let me know what you think down below. Do you agree with ARK Invest's overall bull thesis? Do you think that maybe they're being a little overly optimistic, and by putting Tesla stock as like their largest holding in some of their ETFs, do you think that that's maybe a little dangerous because Tesla hasn't really proven to be consistently profitable? Or do you think that it's justified because of all of Tesla's future potential and how well they're performing right now? And keep in mind, these price targets that ARK Invest is throwing out there, they do seem very high, but it's also their kind of ultimate bull thesis. It's like if everything goes perfectly well, and it's over an extended period of time, right? It's over like the next 5 years. So do you think that it's overall, some of their thesis kind of makes sense, or do you think maybe they're a little overly optimistic? I don't know. Let me know what you guys think down below. I think maybe a little overly optimistic myself, but I kind of like it because I am a shareholder myself, so I like to hear their bull thesis, and I think they actually do make a lot of great points. So anyway, I hope you guys enjoyed the video. If you did, make sure you hit the like button, and thanks again for all the support, and I'll catch you guys in the next one. Take care. Bye-bye.